Welcome to Tuttle Talk on 1190 AM. Now, live in studio, your host, local real estate expert, Andy Tuttle.
Good morning and welcome to Tuttle Talk on the Real Estate Radio Network, where we teach you what the rich and the banks do, not what they tell you to do, and where we dispel the misconceptions of financial fitness and the local real estate market and show you how focusing on a few key principles really can free you up to focus on the other important areas of your life, like your friends, your family, and the community. It's the most important hour of radio right here on Clear Channel 1190 AM KFXR in the great state of Texas. I am your host, Andy Tuttle. Thank you so much for joining me. You can reach out to us on our off-air number, never going to surprise you with being on air, at 214-736-9696, 214-736-9696. You can also email me at questions@andytuttle.com, and you can become a fan of the show and get into the conversation at facebook.com/Tuttle Talk. Always have great information there, giving you great tips and trying to talk about how to dispel the financial wellness rumors that are in our marketplace and keep you up to date on all the kind of good current events that are going on. So get in the conversation there. And I know you want to get out of your car and you got to get grocery shopping. So just pick up your phone, put in your headphones, and go to the iHeartRadio app, and you can keep this radio show going. You can actually get a lot of great stations there on that app, iHeartRadio app. And you can also listen streaming at DFW1190am.com. Okay, guys, we have a great show today. I'm very excited about this show. We are power-packed with a lot of content. We have a very special guest today. Dave Savage is here. He is the founder and CEO of Mortgage Coach. It's the leading company in the industry, but it is a company that provides analysis tools to equip, and in fact it does equip, the top 5% of loan originators in the country. And it's all about helping you make smarter decisions about your financing. And today he is on the show because he is introducing their first consumer product that's going to help change the mortgage experience for you. I'm so excited to have him here and honored to have him here. He's a great mentor of mine and a great leader in the mortgage industry. So you're going to want to stay tuned for that in a few minutes. I'm also going to cover what the heck's happened in the bond market over the last couple of weeks and what you need to watch out for as far as interest rates. And then, and this was very popular a couple weeks ago, we had Justin Nichols on in our Ask Mr. Credit segment. We got a lot of great feedback from that, and we gave a lot of good information, so we're going to give you some more credit tips on how to improve your score. We've got Matt Aycock back here today to dispel some of the estate planning bad noise that's going around and how you can prepare yourself for a secure financial future for not only you, but your family in future generations. And this is going to be fun. We get a lot of great questions from you guys about your confusion about this very frustrating mortgage process. So we're going to bring our very own Brian Moore on. He's never owned a home before. He's our videographer, and he has found out that he actually gets more confused and finds out he doesn't know anything about this process the more he gets to hear from us. So we are going to get him to ask us some of his raw, basic questions, and we're going to give you some raw answers and hopefully give you some insightful answers on how you can have an easier process and get rid of the fear about buying a home or even looking to restructure your financing. But first, I would like to introduce to you the man, the myth, the legend, a good friend of mine, a great leader in the industry, Mr. Dave Savage. Dave, welcome to the show.
Hey, thanks. It's great to be here.
You like that introduction?
I love that introduction.
Thanks so much for being here. I know you're flying in for another conference, but I thank you so much for stopping by our show to spend a few minutes with the community, because what you guys do is so great. If you don't know, and I know I mentioned it briefly, but basically Mortgage Coach is the industry leading company on providing analysis tools that help you make smarter decisions about your financing. It all started in '96 when, Dave, here, you were a loan originator, correct?
Absolutely. I was a loan officer just like everybody else that we serve now today, helping homeowners with their mortgage financing. In those days, at least from my perspective, it was, quote payment, quote closing cost. Do you want to do it? Let's go. And I just knew there had to be a better way that was more valuable for the loan officer and much more valuable for the homeowner.
And it has been more valuable. I know I've used this for 7 years now. No, 8 years. Since 2005, I've been using your software, and you've seen so many advancements since then. But I know back when you started it, you actually use it as a tool before you started using it for loan originators to help financial advisors even provide better advice to their clients, correct?
Absolutely. Well, as most loan officers specialize in different things. Some specialize in working with realtors. I personally specialize in working with financial planners and CPAs and helping their clients. So they had more sophisticated clients, they had more sophisticated needs, And, just little things like, I've been in the home for 5 years. Does it still make sense to refinance?
Right.
Taking a look at that. Back in those days, there was no software that evaluated that. It was just a gut decision that people made. So that put us on a quest to start Mortgage Coach.
So, I love that, because even today, besides Mortgage Coach, there's really not any other great software that helps clients do that in an engaging way that they can understand and see what's really going on, that it makes sense to them. But back then, when did you really think that you could turn that idea that you used to help financial advisors into a whole company that would reach thousands of loan originators, the top originators across the country?
Well, when I started the project, I started it for my company and myself. And so I figured, hey, if we could build this software that just helped us deliver better advice, it was worth doing. When I realized I had a business, it was about a year after we created the software. I had the opportunity to speak in an event in our industry. It's called Sales Mastery. Thousands of loan officers, mostly the best loan officers in the industry, attend this event, and I was a speaker at it because I had a unique way of doing business, and I thought I would try to sell the software. So it was $1,000 to sign up and get the software, and we sold, I can't remember, it was 96 or 104.
Goodness.
So, it was like, boom, overnight, we had a business.
Right.
It resonated, and then my wife worked out of our home office for the next year while we got our first 1,000 customers. And, we knew we had a business.
That is definitely a good sign when you have when you can sell 101 event like that. So I will say that in the last 15 years, and then I can say for myself, the last 8 years I've been using it, it's absolutely changed the way I work with my clients. It changes the way we scale our business, and the consistent feedback we get is it totally helps the client see mortgage in a completely different way than they ever saw it before, and helps them really make smart decisions. In fact, we use this and get with their financial advisors as well, so they can really make decisions that really benefit their family. So that's for me personally. How have you seen it in the last 17 years or so affect the mortgage industry?
Well, I'll answer that question two ways. So one, I've always just been a very passionate believer that for most people, their mortgage is the biggest financial planning decision they ever make. And like I said, by making it purely on the basis of what your payment is and what are the closing costs to get the loan, that's very surface. There's much more to it. So from what I've seen, I've seen it change the life of loan officers, because when they deliver this advice to homeowners, more of the homeowners they talk to do business with them. Mm-hmm. They get tremendous, so many more referrals, because they're not just quoting rates and it's like, okay, you got the lowest rate, I'm going with you, or I liked you the best, I'm going with you. It's like, wow. And by the way, that's the company when we first started was called Wow Tools, because it was all about surpassing people's expectations. How can we deliver advice and insight in a way that surpasses expectations? So it's been nothing short of life-changing for everybody involved, homeowners to loan officers.
So now, here we are, 2013, and you've been mainly going and helping loan officers provide advice to the clients. But now you're coming out this week. You just came out. You just launched a consumer product for the homeowner directly. So what is this product, and what do the clients, what do the homeowners get from this?
Okay. So like I said, we've been doing this for 15 years now, powering, for the most part, the top 5% loan officers. When I say top, I'm talking about a combination of success, and they truly care about doing the right things for a client. For a loan officer to say, hey, I want to show the total cost over 5 years, not every loan officer wants to provide that level of transparency. I want to show you how to become debt-free faster by prepaying your mortgage. Not every loan officer wants to do that. So we've been successful at that. It's been very exciting. But my biggest frustration is, how can we get more? How can we touch more people? In my opinion, there wouldn't have been a mortgage meltdown if everybody went through this enlightened process. So we're going right to the customer. We're rolling out an iPhone and iPad app. It's rolling out this week. Not going to steal the thunder of our community, tell you the day or the hour. But, go to mortgagecoach.com, go to the Apple Store. For consumers, it's free. It's a free download. And then you will, get a link from your loan officer, go through a very enlightened experience in how to make a mortgage decision. And again, when I say enlightened, don't confuse that for complexed. What we really need to be good at, and what I think we've become good at over the years, is making complex concepts simple. So there's a lot to it, but we make it really simple. 1 to 2 minutes as a homeowner between downloading the app and going through it. And now you'll look at your mortgage the way it deserves to be looked at, a financial planning decision. If you pick the right one, you can retire years early. You can save hundreds of thousands of dollars. You pick the wrong mortgage, you're in debt for the rest of your life, and you're in financial stress. So that decision, people think the difference between one loan and another might be only $15 a month. No, it's much greater than that.
Much greater than that. I appreciate you saying that, too. That's what I talk to you guys about every week, and this is the reason, because it's such a huge decision. Most people understand asset management way more than they understand debt management. Your mortgage is a debt, but it's a financial instrument that can help you create wealth over time. Dave has pioneered the way and the technology to help you do that in a simple way. Check it out. Go to mortgagecoach.com. It's free. It's right on the front page. Click it and download it and get the information if it's not out yet to get it when it does come out. And it's launching, like you say. I mean, it's coming this week.
Absolutely. It's there. You can either, like I said, go to the Apple Store through your iPhone, through your iPad, or you could go through mortgagecoach.com. And for you Android folks out there, stay tuned. Good things are coming.
Thank you, Dave, so much for joining us.
All right. Thank you. It was great to be here.
All right. You're listening to Tuttle Talk on the Real Estate Radio Network. Now it's time to get into our Ask Mr. Credit with our good friend Justin Nichols of the Nichols Law Firm. Been getting a lot of good response from your advice and expertise and education over the last couple of weeks, Justin. And one of the questions and one of the challenges that we face on a daily basis is that the credit report has kind of some fundamental flaws in it.
Sure. Well, the credit report is primarily used as a record of all the bad things that you've done. Very rarely do people look at the credit report and say, gosh, you paid your bills, your electric bill, all through college without ever getting the electricity.
Bonus.
Yeah, but if you didn't, you can guarantee that's going to be on your credit report. So
True.
I think credit reports are unfair for a number of reasons. And I want to be clear that this is not about not paying your bills. It is not about getting out of money that you owe fair and square. But my problem with credit reports from a theoretical standpoint is that they're used as a sword to punish you, but there's really no mechanism to compliment you for the good things that you've done. Debt collectors and creditors pay the credit bureaus to be able to report negative things about you. Unfortunately, the times that you do pay your bills on time, a lot of times until you do something wrong, those people aren't going to spend a dime to let everyone know how great you've been. And that's one of the problems I have.
That's a big problem. That's a very interesting point of view, too, because I don't even think about it like that. Because if you did that, it would be a whole different model. And it's kind of sad because people don't know how good you are. They just know how bad you are.
Sure. And think about this for a minute. Where else in our society do we have a private company like the credit bureaus who distribute information about us that impact our ability to get a home, to get a car, to get credit cards, how much we pay, to get insurance, the premiums, now to get employment, to get housing and apartments, when there is no impartial review process from a third party? All you can do, and that's not true. You can do a lot, but it's a lot harder. For example, I always take the apartment manager who didn't like you, and you move out, and they decide you caused $500 damage to the mini blinds, and they send it to collections. And you say, no, I didn't, to the debt collector. And they say, well, yeah, you did. They referred it to us. What are you going to do? You dispute the debt. They send you a copy of the verification that says $500, but that doesn't prove anything. Nowhere else in our society do we have a mechanism that's so influential in our daily lives that private companies get to collect this data and distribute it with no appellate or impartial review process. And that's one of the other things that I really struggle with in dealing with consumers and their credit reports. Is it's just fundamentally unfair because there's no impartial party saying, hey, this is the right thing to do here.
That's a very good point. And baby, I know you're in the apartment business, so he's not talking about those people that really do deserve, that did destroy the blinds. It's those other ones. So, and it's not your company. I love
no,
you.
It's not. And I'm not trying to get it out. Again, a lot of people might think that I'm trying to get people out of what they truly owe. That's not what this is about. I say it to make a point that there's no appellate or review process, and that's the problem I have. But don't destroy the blinds, for God's sakes, when you move out of an apartment. And if you do, pay for it.
That's right. And don't think you're going to get away with your dog urinating all over the carpet, because guess what? They have black lights, and they will find out. I found that out with my wife, and then she's like, no, they all over the carpet. What is this gross? It's disgusting.
Black lights.
Be careful. So not for a party, Justin. So, but here's a good point that you make, because if you think about this, you have if let's say you have a 7 years of great credit, but it's early on in your life and it's not a lot of stuff that is reported to the credit bureaus, but then you do have that one snag with the blinds or whatever, and now you got that and your credit's destroyed, but it doesn't take into effect that you've been great for 7 years. So that is a fundamental flaw. If you're experiencing, it's just the game. So learn how to play the game, learn how to get ahead of it, and how you can do that if you're facing those challenges is call us at 214-736-9696, 214-736-9696. We're going to get you with Justin. It is a free call. You invest when you get results. There's no better way to do it. It's not a monthly subscription, guys. You don't pay till you get results. It's the best way to do it. Call us or email me at questions@andytuttle.com. We'll get you with Justin's team, and he will take care of you like he's taken care of hundreds of our clients and even many of our employees. Thanks so much, Justin.
Thanks for having me.
All right, you're listening to Tuttle Talk. Coming up, we're going to get into what happened in the bond market recently and how that affects you if you're looking for a home right now. Also, we're going to talk to the voice of the people, Brian Marr. He's never owned a home. He does work for us, though, and he has some great questions, I'm sure of it, and we'll see if he can stump us, but hopefully we'll provide you some insightful information and kind of get rid of the confusion and some of the frustration that goes along with buying or looking at refinancing your home in this market. So, stay with us.
This program is brought to you by the Real Estate Radio Network. Visit realestateradio.us for more info. That's realestateradio.us.
You'd get upset when your insurance company doesn't pay your claim. More often than not, the reason is because you didn't buy the coverage that you thought you had. Just because you have a policy does not mean that you have coverage for all of the things that may happen to your house or your car. Your education about proper insurance coverage does not have to be long and drawn out. Want some help? Call me. I'm John Allen with Texas Community Insurance, and you can reach me at 214-736-9696. Once again, that's John Allen at 214-736-9696.
As a business owner, are you getting all the tax advantages that are available to you? Are your assets protected from creditors as much as possible? What are you doing to save and invest your hard-earned income on a tax-favored basis? And finally, are you aware that you can legally discriminate in favor of yourself and other key employees with certain planning techniques? Hi, I'm Randy Nichols, partner at Spectrum Financial Group in Addison, Texas. If you answered no or you're unaware of the answer to any of these questions, call me at 214-736-9696. I can provide you with the answer to these and other important questions to help you improve your personal financial situation and take advantage of all the benefits that are available to you. Call me, Randy Nichols, at 214-736-9696. That's 214-736-9696. That's 214-736-9696.
Everyone is busy, not to mention the headache that comes with moving. And that's why Utility Concierge is here, to make the moving process easier, faster, and simpler. Utility Concierge will connect you with all the available options from basic utilities to cable, phone, internet, home security, and everything in between. Don't waste hours on the phone talking to service providers when you can make one call to Utility Concierge, the one-stop shop for your move and your home needs. You make the selections, they make the connections. Call 214-736-9696, 214-736-9696 to get connected today. Welcome back, Dallas. You are listening to Tuttle Talk on the Real Estate Radio Network. I am your host, Andy Tuttle. Remember, you can listen on your iHeart Radio app, and you can reach us at 214-736-9696 or become a fan of the show at facebook.com/Tuttle Talk. And if you miss part of the show or you want to catch any show in its entirety or even specific segments, you can catch all of that at andytuttle.com. All right, we're going to get to Brian Moore here in a minute. He is a idiot savant. No, I'm sorry. He's not an idiot savant. I meant he does not know about the mortgage process. One of the few things he doesn't know about. He's actually one of the smartest people I know. But lucky for me, there's one thing he doesn't know, and that's about the mortgage process and buying a home. And we're going to get into that in just a minute. And he's going to ask some very poignant questions. I'm not sure what all of them are, actually, but hopefully we'll give some insightful answers to you. But first, I do want to give you a bond market update. That's one of the purposes of the show, is to keep you informed on that. So let's quickly get into some mortgage matters. And this segment's brought to you by our friends at Utility Concierge. Remember, you make the selections, they make the connections. So have them help you on all your home connection needs. You can get connected today. You can call us to do that, or you can go to utilityconcierge.com. All right. Here's what basically happened. One of the main things, we had some good job numbers. I mean, we've had some better than expected unemployment numbers, better than expected employment numbers. We have had any bit of positive news now is helping the stock market. Overall, they just want to jump at it, and they want to, they basically are buying on that, and we're overdue. We are overbought in the stock market, but that puts pressure on the bond market. Even though we've had some actually bond-friendly news, that has not helped us, because overall, the bond market has also been due for a correction. We're on what's called a downward escalator in price, and that's inverse relationship with rates. So the lower the price, the higher the rates. So we're on what's called a downward escalator. So technically speaking, we all have been overdue. We've been on this channel where we should see some higher rates. Couple that with the better than expected jobs numbers and what's going on in the stock market, and you're going to see some higher rates. Matt, is there anything else I missed on that's been going on the last couple of weeks?
No, that's pretty much what I'm seeing as well. I mean, I do agree with you that rates will start to trickle up over the next few months, and perhaps, even as much as a full point and a half. So, now's a really good time.
Putting in a big prediction. I like that. And here's the deal, guys. It's not a straight line. It goes up and down. It's a little bit of a roller coaster. So here's what this means to you. If you're in the home buying process, you need to get back in touch with your loan originator. Now, if you're working with us, we're already doing this for you. We're watching the market every day. We have the tools. 95% of loan originators do not use bond market tools. So just remember that. So you want to call them and find out if they're watching the market. You need to find out what position. If you're making an offer on a home, see if they're able to lock you in before that's happened. And if not, you need to talk to them if it's a good idea based on your timeline to close, if it's a good idea to float right now or to lock in with a possible renegotiation about a week before closing. So it's a good time to get back in touch with your loan originator, your mortgage professional, to discuss that. If you're looking to restructure your financing right now, this is the time to get your application in, and maybe you do what we call a rate watch, so that the next time we see a little bit of a correction to the betterment of rates, it may only last a day, it may last a couple of hours, it may last a week. If that's the case, let them float you, and then you'll be in a position to lock if we see better rates, okay? So it's about lock strategies, not just locking your loan on whatever day. You've got to watch it, get it in the hand of professionals, and they'll watch that for you. If you have questions on that, you can call us 214-736-9696. We'll answer your questions and help you out with that. Okay, here we are on Tuddle Talk with the man, the myth. No, he's not. He's not mythical. He's not legendary yet, but he is a very good man. Happy to have him working for us and with us. And it was actually his idea to ask some really good questions today that we've been getting from our clients and from our listeners, from you guys, about the home buying process. And so we want to get to that today. So, Brian, welcome to the show.
Thank you very much. Yeah, I've been working with you since this past summer, basically. And
for that punishment, I get you on air.
Yeah, exactly. Gee, thanks.
No, I meant punishment for you.
Oh, well, wait a minute. Am I a punishment now?
You got totally confused. You totally missed that. Keep going, my friend.
Oh, my goodness. I hear so many questions from people. They find out that I work with Andy Tuddle from Tuddle Talk over at the Real Estate Mortgage Network. They start asking me questions. I have zero answers for them, and I tell them, look, my job is media. I don't understand the mortgage industry, really. Andy gives me information, and I proceed on that, develop content, make some videos, cool things like that. But when it comes to mortgages, I am clueless.
So let's help get you some clues, and hopefully some of you guys out there some clues as well. So, Brian, what are some of these questions you got, buddy?
One of the biggest ones, how much house can I afford?
That is one of the biggest questions we get. And actually, I want to see if, Matt, you may be able to weigh in on some of this too, but there's a couple of things. One, it does, and I bet you have some follow-up questions that go to this. But one, obviously, how much you make, some basic stuff. What is your income versus what your debt is, your debt-to-income ratio? And that debt is actually only the debt that is reported, in most cases, only the debt that's reported to your credit report. So not all your cell phone bill is not included in that debt-to-income ratio. Your what is included is your car payment. If you have a current house and you're going to keep that house, that's going to be included. Any credit cards that you have, anything that reports to the credit report is going to be considered your debt, and then it's going to go off your gross income. So your before tax income, and it's going to basically divide those, your debt, let's say you have a monthly debt of $2,000 a month that you pay out, right?
Right.
Let's even do simpler. Let's say it's $1,000 a month that you have in bills with your car payment, your credit cards, and the like, right?
Okay.
And then you make $4,000 a month, gross income before taxes.
Right.
So that debt-to-income ratio is a 25% debt-to-income ratio. It's what you call your top-end ratio.
Okay.
So
that
that
makes sense.
Okay. And then you add your house to that on the back end. So let's say that is $1,000 a month, right?
Okay.
So if that's another $1,000, that's $2,000 to $4,000. Well, now you're 50% back-end debt-to-income ratio, and that's too much. So you may have to cut that down to about an $800 payment for you to qualify technically. So that's the technical answer. That is how much home you can afford. Is what is your debt-to-income ratio, and then what reserves do you have? And your credit score affects that because that'll determine if you can go do an FHA loan, which is a little more of a first-time home buyer loan, has a little more lenient guidelines on debt-to-income ratio and credit score, or a conventional loan, which is a little tighter guidelines, but you can get some better terms there. So that's on the technical aspect. The other aspect is really what's your lifestyle? What are your financial goals? What are your plans for the home? How long are you going to be here? And that's a little more nebulous, so we'd have to dig into some other questions. But as far as technically, that's how they determine what you can qualify for. Matt, do you have anything to add to that?
Yeah, I just want to kind of highlight the last part you said there. It's extremely important to look at what your goals are in home ownership. A lot of people want the biggest house that they can qualify for. You should never buy the biggest house you can qualify for, because that is at the very limit of what the bank thinks you can afford to have. So, you miss too much work and so you're a little short on your pay or something like that, you're going to lose that home because you stretched. It's a good idea, and I typically advise my clients to stay at about 70% of what they can qualify for, because that gives them a lot of wiggle room in the case that something goes wrong.
Oh, okay. That's actually really good information. I mean, personally, I would want to try to get the most house I could for my dollar, and even if I feel like I'm kind of stretching myself thin, it's like, well, hey, I got the house I really, really wanted.
And that's actually exactly that's one of the reasons we got into this mess that we were into, because people want to get the most. They're like, well, this is the most beautiful house. The realtor shows them the highest priced house, so then they have the champagne taste. Now they can't afford that house, and they push the lender, us, well, I can qualify for this. If you don't qualify for me, and I'll get Joe Blow down the street to qualify me for that house, and I'll get it. And so it's this cycle of doom is what it is.
Yeah.
I affectionately call it that. But Matt, it hits nail on the head. Many times the same thing we do, Brian, and we talk to you about this when the time comes, is, all right, great, you qualify for a $200,000 home, but that's the max you qualify for based on your lifestyle, the fact you don't have 6 months reserves, you don't have this or that, and you want to do X, you probably should get for a $150,000 home. Right? Okay.
Yeah, that definitely makes sense. And, kind of going back to what you were talking about as far as your credit affects what you can qualify for FHA and conventional. What is the difference between FHA and conventional, really, and how do I know if my credit's good enough?
Well, that is the biggest difference between FHA and conventional is, one, FHA is basically a government-insured loan. So they don't do the loan, still the lender does, but they basically say, hey, look, if something goes wrong, we're going to insure it. And so they're more lenient. So let's say, for example, if this helps, on an FHA loan, if you had a bankruptcy in the last couple of years, well, you could do an FHA loan, but you couldn't do a conventional loan. If you have if you have a lower credit score, so you've had some dings, maybe you've got some collections on your credit, maybe you've got, whether they're medical or not, maybe you got some bumps and bruises on there, right? Well, an FHA loan is going to be a better fit for you, because you are going to be able to qualify for that easier and still get basically the best rates in the market. Whereas on a conventional loan, they really are looking for the borrower. People go, well, I got a 720 score. I should, give me the best rate. Well, for conventional, that's just bare minimum. That's just getting you in the door. It's not you don't get a prize for that. That's the minimum they expect. When you get below a 700 credit score, the terms start to get worse, and you really are, exactly, the rates hike up, and you're in a bad position. So conventional loan, and Matt, maybe you can help me on this too, the best way to describe it is really for the person that has the pristine credit, great assets, no problems on that, and they're going to get the best terms. If you've got any bumps or bruises on your credit, FHA, still a great way to go. It's a little more expensive on the upfront cost, but we can structure that in and help you out with the seller. But it allows you to get the home with 3.5% down versus the minimum conventional of 5% down. So it's less money down, lower credit requirements, and a better way for you to get in if you've got bumps and bruises.
Wow, that sounds really good, actually.
Yeah, no, I totally agree. FHA is a great program for the first-time home buyer. Typically, I don't see conventional for any of my clients unless it's their second or third home, and then they have some money, some equity from their first home that they can roll in to cover the down payment requirements. So, yeah, first-time home buyer, FHA is generally what I recommend. Sometimes I'll recommend, depending on where they are, like a farm loan, rural program.
They got USDA loans. And that's right. You're going over the basics, but there are other loans. USDA loans, there's also some bond programs for people out there that need based on how much they make, et cetera. You can get some grants basically from the city or the state to help you with your down payment.
Really?
And then there's, you're like he's going to buy a home now.
I had no idea.
This is great. So then if you're a veteran, and this is actually the only real 100% financing program out there is for veterans. So, that's a good reminder. I know you didn't ask about that, but if you're a vet, they really take care of you. You don't have mortgage insurance. You don't have that monthly insurance that goes on top of your payment. You don't have really a lot of the things that would inhibit you. You actually have some of the same low credit requirements that you do on FHA, but you get 100% financing and no monthly mortgage insurance payment. So it's the best deal on the market. They really take care of the military.
Oh, that's good, and they should. I mean, those guys deserve that. Those guys and gals.
That's right, the guys and gals, and no matter what, you support the troops. Hey, what do you got for John over here? I'm anxious to see him chime in here. See if you can stump old John.
For John, when I'm considering purchasing a home and I move in, I know that I need to start thinking about different kinds of insurance that I'm not familiar with at all. What are the kinds of insurance I should be thinking about?
Well, homeowners insurance, is offered by a lot of different companies, but I think fundamentally what you want to look at is my coverage replacement cost, or the alternative is a thing called ACV, which means they depreciate your house. You want replacement cost. And then you want to make sure it's got all the water coverage types that you can get with it. Not all policies come with that. So to keep this simple, let's start with this. The top 3 loss categories for homes are wind and hail is the biggest one. That's 51%.
Oh, sure.
Then water, and then fires, 15%. Water's 25%. There are some companies, a lot of them actually, that do not offer some of the water endorsements. So it's really important really for a first-time home buyer to look at all of the water endorsements, make sure they're in there.
So does that mean like flood insurance, things like that?
Well, fundamentally, there's 4 types. One is flood is anything that accumulates outside and moves into the house. So if you have a pool, if you live on a hillside, even if you're not in a flood zone, you ought to think about flood insurance.
Wow, a pool didn't even cross my mind.
Never even crossed my mind.
It didn't actually cross my mind either. That is interesting.
If it overflows, where is it going to run to? Well, it's going to run down the drain. Well, what if the drain's clogged? Right? I mean, theoretically, you're right, but if it doesn't and it goes in the house, it's flood. And if you don't have flood insurance in that scenario, it's not paid. The 3 other ones quickly are water damage, which is anything through the walls and ceilings, water backup, so if a toilet or a sink or something backs up, can have coverage for that. And then one that some people miss is it's called slab leak coverage. It's the pipes in the foundation of the house.
Oh,
so
yeah.
if you have a pipe burst in the foundation, you don't have that coverage. It's really pricey to fix. Why? They have to drill into the foundation, fix it, then redo your kitchen floors, right?
Wow.
So you can have an $8 or a $10K bill for a $50 endorsement. And if you're in the mode of saving money on premium, you want to save $50, it could cost you big dollars down the road.
So that's actually, I wanted to just dig into that. Is that one of the things that they do, like when people are trying to get the best rate on insurance, best price, and they're like, well, I can cut you, I'm $50 cheaper. Are they cutting out things like that?
Absolutely. And that's why you have to know to ask the question. So really, just to keep this simple for you,
yes,
just think about the water endorsements. Just start there. A lot of the other stuff comes with it anyway, but if you start with the water endorsements, if you don't see it endorsed, it's probably not in the policy. Doesn't matter what your rep or your agent said. If you don't see it endorsed, it's probably not in the policy. Remember, insurance is a bet. You don't make the bet, you don't get paid. So you got to get the endorsements.
And remember this too. You know, Brian, you could just work with John Allen. You don't have to worry about any of that.
That would be the easy answer. Yeah,
I think that's the thing to do right there.
I love it. No, appreciate you, John. You're listening to Tuttle Talk on the Real Estate Radio Network. We're actually talking with Brian. He's never bought a home before, and he's asking us just his general questions, stuff he gets from other people, and his own personal questions, and we're answering those here and hopefully giving you some insightful feedback as well. When we come back, we're going to get some more zingers from Brian and see if he can stump one of us. Probably be me. If there's anybody to be stumped here, it would be. So stick around.
This program is brought to you by the Real Estate Radio Network. Visit realestateradio.us for more info. That's realestateradio.us.
Having insurance and having the right amount of coverage are not necessarily the same thing. For example, water damage happens in a variety of ways and is one of the top reasons people file property claims in Texas. But did you know that some well-known companies will not even cover you if a drain backs up and overflows into the house? Just because you have a policy does not guarantee that you are truly protected. Be safe, check with your agent. If you'd like some help, call me. I'm John Allen with Texas Community Insurance, and you can reach me at 214-736-9696. Once again, that's John Allen at 214-736-9696.
Everyone is busy, not to mention the headache that comes with moving. And that's why Utility Concierge is here, to make the moving process easier, faster, and simpler. Utility Concierge will connect you with all the available options from basic utilities to cable, phone, internet, home security, and everything in between. Don't waste hours on the phone talking to service providers when you can make one call to Utility Concierge, the one-stop shop for your move and your home needs. You make the selections, they make the connections. Call 214-736-9696, 214-736-9696 to get connected today.
As a business owner, are you getting all the tax advantages that are available to you? Are your assets protected from creditors as much as possible? What are you doing to save and invest your hard-earned income on a tax-favored basis? And finally, are you aware that you can legally discriminate in favor of yourself and other key employees with certain planning techniques? Hi, I'm Randy Nichols, partner at Spectrum Financial Group in Addison, Texas. If you answered no or you're unaware of the answer to any of these questions, call me at 214-736-9696. I can provide you with the answer to these and other important questions to help you improve your personal financial situation and take advantage of all the benefits that are available to you. Call me, Randy Nichols, at 214-736-9696. That's 214-736-9696. That's 214-736-9696.
And we're back. I don't know why you don't think it's not going to happen. Every week, here we are on Tuttle Talk, Real Estate Radio Network. We got a panel going on today. We have Brian Moore here. He's not owned a home before. He has some great questions that we know a lot of you have about this confusing, frustrating process. We've got John Allen of Texas Community Insurance helping us with answering some of those questions, and Matt Aycock of Pratt Aycock & Associates on our panel today to help get through the mud of this process and hopefully give you some insightful answers. So, Brian, what do you got for us? What are your next questions, buddy?
Matt, thinking about purchasing a home, and, I know that there are titles involved, and I know you do a bit of the title law. What is involved with that as far as why do I need a title company? What do they do, and how much does it cost me?
Well, a title company is actually going to be required unless you're paying cash. Every lender is going to require that you get a title policy and you funnel the funding and disbursement to all the people involved. So the seller gets paid something, the insurance, like for property insurance, taxes may be due, HOAs. A lot of people get paid on a transaction, and the lender doesn't want to just give the funds to the seller and hope that they pay everybody they're supposed to pay.
Oh.
So they will take the title company and have them handle all of that because the title company is insured, and also a title agency is registered with the state. They are heavily audited and constantly watched. As far as the cost goes, there's two types of costs associated with title companies. They're going to appear on the second, page of your settlement statement, and these costs are the fixed cost that's set by the state for title premium. That will not change no matter what title company that you choose. Okay. It doesn't matter. Every one of them is required to charge the same exact title premium.
Okay. And is that published out there for the public to know what that charge is?
It is. It's you can go to the Texas Department of Insurance website, and they actually have it posted there.
Okay.
And also, pretty much every title company will have a rate calculator available to you. The great thing about the title insurance other charges that they have is that those are negotiable. Those are like your escrow fees, doc prep fees, wire fees, whatever they have as far as their fees go. Those are negotiable fees, and so you want to look and shop for the best combination. Cheapest is not always best. Most expensive is not always worth it. So you do want to shop around for that. From what I've been able to see over the last few years, for a purchase transaction, The average is somewhere around $350 per side on an escrow fee in this part of Texas.
Per side, is that buyer
Per
and seller
person,
side?
correct. Each person pays $350, and then like doc prep fees. That's either going to be elected by the lender that you're using. They may have a doc prep company that assembles your package. That can usually run around $200. So if the lender's doing it, then there's really no negotiation room there. If an attorney for the title company is doing it, sometimes there's some negotiation room there as well. As far as any of the coverages, it is a contract of indemnity is what it is. It's not like casualty insurance to protect you against future issues. It's to protect you against the past. And so if somebody after you purchase the home says, you know what, you need to move that fence, it's on my property line, and you're going to have to pay to move it because I own that part of the property, then you file a claim with the title company. The title company will fight for you. In that instance, they will actually handle litigation costs, whatever it takes in order to protect you.
Wow.
Up to the policy limits. Okay. So whatever the policy limit, which is the sales price, that's where they stop. And if it looks like it's going to cost that much, they just will write you a check for that and walk away. So it is a great tool. And one other thing that people don't typically think about is in Texas, it's customary for the seller to pay for the owner's policy.
Okay.
The buyer pays for the lender's policy. And because it's a simultaneous issuance, there's a discount on the lender's policy. And so the seller is really picking up the bulk of that expense. And they've already factored it in most cases into what they're expecting to net out of the transaction.
Oh.
So definitely it's something that you should always get. I always get it for all my properties. I would almost consider it malpractice for an attorney to advise a client not to get a title policy.
Oh, wow.
Yeah, and you do have to have it if you're financing the property. And here's one of the things, since we're talking about costs. Most costs, there's about 8 different companies and over 30 people that work on any given mortgage transaction these days. And so the costs come from all different sources. One of the things to remember, and when you're working with a good agent, is going to help you with this, is, again, the seller takes the burden of the larger portion of the title costs that are there because the title policy is the biggest part of that. And with the other costs, typically you negotiate that into the contract. So there are ways to negotiate it where the seller pays your closing costs. And these days, most of the time, now 95% of the time, there aren't points being charged because the way they changed the game a couple of years ago, it doesn't make sense typically for a lender to charge a point, 1% of the loan amount. So that's what a point is 1%.
Yeah, that's what I was going to ask, is what is a point?
It is 1% of the loan amount. So $200,000 finance. So if you buy a house for $200,000 and you put 10% down, you're financing $180,000. So one point would be $1,800. 1% of the loan amount. That is typically used to buy down and get you into lower terms, or there were back in the day some different strategies to charge percentage points up front. Nowadays, most of the time, that's just not done.
So what's the difference between me paying these points and just having a larger down payment?
Well, good question. But so the down payment goes typically toward your sales price. So again, a down payment will go towards, if you bought a $200,000 home, for every percent down that, you're putting an extra $2,000 toward that sales price, right?
Okay.
If you could also, this is the only reason it actually makes sense. So you may put 10% down on a property, right? And you're financing $180,000 at, let's say, 4%, just to throw out numbers on your rate. Well, you could put, let's say, 5% down and then put 1% down to buy down your interest rate and have the same payment. So you could say there are strategies where you would pay a point to get into a lower interest rate so you don't have to put as much down to get a targeted payment. Does that make sense?
Yeah, absolutely. So it sounds like up front it's ultimately saving money to have less of a down payment but pay a point or two.
It really does depend, Brian.
Okay.
That's a situation where one of the reasons we had Dave on, that analysis software, you can go over those options because depending on your credit and how much your mortgage insurance is and what kind of home, what size of home, all these factors go. How much down is it? Is it 5%, 10%, or 20%? There's all kinds of factors that weigh in. So you can draw up, though, and look at a few different scenarios to find out if it makes sense to do that. It really does depend on how much extra cash reserves you have, where do you need to put that money, et cetera. There's a lot of factors. That's why you go over a full analysis. But generally speaking, whatever costs you pay, you can structure it where the seller pays those costs for you, so you can just bring your down payment to closing and not extra closing costs, right? So if you have to put 5% down, let's say, on that $200,000 home, that's $10,000 out of pocket.
Yes.
Well, you may have another $5,000 in cost. Well, that may be tight for you. Well, you can structure that where the seller pays those costs for you in the contract, so you just bring your money to close.
Oh, okay.
Make sense?
Absolutely. Yeah, thank you. And, going back to Dave's mortgage coach thing, working with you, I've got to see a little bit of that without actually understanding it. But the funny thing is, looking at it there on the screen, I see so much valuable information. I mean, it amazes me how you can just plug in a few numbers. You get all these amazing bar graphs and pie charts and everything. It's showing you the market trends, and I mean, so much information with actually so little work, it seems like.
Yeah, actually, there's some work into it. But you're right. It is still little work. It does a lot of the heavy lifting for us. Yes. It is really good. Now, I know you had another question for John. I wanted to get to that before we have to cut out.
Yes, thank you. John, when it comes to insurance, I've heard about people needing like liability insurance for their home. What is that, and why do I need it?
Well, liability insurance comes with most homeowner policies. If your dog bites a neighbor, covers you for that.
Okay.
If you have a neighborhood kid falls into your pool, drowns, covers you for things like that. So it covers things that might happen to you as a homeowner.
Wow.
That could get you in trouble. That's an easy way to say it.
Kind of danger protection around the house, huh?
Absolutely.
Gotcha.
So here's an interesting twist. So if you are away on vacation and a neighborhood kid hops the fence and falls in your pool and drowns, it's a thing called vicarious liability. That comes back on you. So you need to take safeguards to make sure that they can't just walk into the pool.
Okay,
That's
pool.
why you have liability insurance.
I'm not getting a pool, no kids falling in, no flooding of my home.
That's true. You just sold against pools. It's great.
Sorry, guys. Doom and gloom is not a...
Hey, that is hilarious. Well, Brian, thank you. Great questions, man. I hope it was helpful.
Absolutely.
We'll segment this part out so we can just have this piece to give and hopefully be able to use to help you out there get some answers to maybe some of the same questions you have. John, Matt, appreciate your insight on that as well.
Yes, thank you. Thank you, Andy. Thank you, John and Matt. Definitely some great information.
All right, you are listening to Tuttle Talk here on the Real Estate Radio Network. Now it is time for our Real Steal of the Week. This week we have Becky Tuttle, that's my mom actually, with Halo Group Realty. Hi, Mom. How are you doing?
I'm doing okay.
Okay, good to hear. All right, so really quickly, what is your steal for us this week?
It's 8601 Sikorsky Lane in Dallas.
Where in Dallas?
Well, it's in the White Rock Village area.
Okay, great.
And it's listed at 1059. It's a 322, and it's already had new carpet and some upgrades, and I think that's a steal for any first-time home buyer. They can just walk in and live there.
Well, that would help. We had Brian on the show today. That would be a perfect little spot for him, a great area and the perfect price point for what he's looking at. So that is a real steal of the week. Now, Mom, will you make sure to get me that link so I can put it on my fan page?
I'll do my best.
Well, I know your best will be good enough. So send me that link. And thank you so much for giving us the real steal this week.
Okay.
All right. Have a great day.
All right.
All right, now it's time for Coach's Corner, where every week we go over your physical fitness needs as well from Coach Jimmy, he lost 100 pounds doing this stuff, following this philosophy, he's using these types of products, and he comes to us every week to give you some great tips. Coach Jimmy, thanks for being here.
Hey, it's always a pleasure, Andy.
Yeah, so I heard some great news for you. You just got to be an Insanity Master Coach or something, Master Trainer, right?
Yes, we're actually launching the live version of the Insanity workout, so people will be able to go to a gym near them or a fit club or a class and actually enjoy Insanity sweating next to friends of theirs, so you no longer just have to do it at home in front of your television set. We're pretty excited.
You should be excited. That workout it really legitimately is insane, but it is awesome and gets great results. Everybody knows what it is, so we'll talk about that here in just a minute. What, Jimmy, are some tips you have for us this week?
Well, Andy, I was noticing that, I look at a calendar every day, and it's amazing how quickly time flies by, and we are at the end of the first quarter of 2013. And so, so many of us made New Year's resolutions, and we look up and we're like, wow, a fourth of the year is already gone, and maybe we didn't do what we said we were going to, and it's real easy to beat yourself up. And so I just want to encourage you, and the same way I have to encourage myself all the time to say, you know what, there's no time to feel sorry for ourselves. There's always a time to take action and to shift that and just say, okay, we're going to refocus. We have this next quarter, And, it's spring break time. Summer's around the corner. It's a great time for people to not feel bad for themselves, but to just get up, take action, plug into some kind of support group, and get moving.
I love that, and I know you have a big support group coming up. In fact, it's going to be another Fit Club that's going to happen at Clyde Warren Park. Tell us about that real quick.
Yeah, I'm so excited. So this goes hand in hand with the Insanity certification. So as you know, I had the opportunity to be in the Insanity DVDs, and so now we're looking to pay it forward. We're starting the Dallas Insanity Group at Clyde Warren Park in Dallas, Texas, and it'll be every Tuesday at 5:30, like right after work. You can come down there and get a good sweat on with a bunch of really fun people. 5:30 every Tuesday starting in April.
That is fantastic. And then after you're done with that, you can go to one of those great food trucks right there and get some healthy banh mi, because I love that stuff. Well, buddy.
Absolutely.
I will see you there. If you are interested in getting fit, again, this is the time to do it, starting April 2nd, every Tuesday, 5:30, Clyde Warren Park. You get to work out with Coach Jimmy. He is the master trainer, and tons of great people out there, like you say, getting your sweat on. So, Coach Jimmy, thanks so much as always.
Always a good time, Andy. Thanks.
All right, brother. Have a good one. You're listening to Tuttle Talk. I hope you have enjoyed this hour. Remember, if you want to get a hold of me, you can call me, 214-736-9696. Maybe you have questions like Brian. You want to find out more about how to get involved, what you need to do to buy your first home, or maybe you're looking at restructuring your financing. Maybe you just need to take serious the estate planning, get a will, get a trust in place, or you need to see if your pool is going to flood your home and if you need to get coverage for that. Well, call us here, 214-736-9696. I'll get you connected to the professional that is there and will be there to help you. Don't forget, also get your boots on, bootcampaign.com. Every Friday, post your pictures to the site. We want to know about you, and we want to see your boots and support our troops. And then you can go to yourmortgagereview.com. If you don't want to call, just go to yourmortgagereview.com, fill out a quick analysis of your situation. We'll provide another total cost analysis like Dave Savage talked about earlier, and we'll give you a free copy of your credit report as well to help you make smart decisions about your home financing. I'd like to thank Brian for being here. I'd like to thank Dave Savage, and of course, as always, John and Matt and all the show expert contributors. And I'd also like to thank Danny Miles, our production director, who puts up with me every single week. That's it for today. Race Talk with Pete Hronis is coming up next. This is Andy Tuttle for the Real Estate Radio Network. Don't forget, you can listen on the radio, you can listen online, you can listen on your iHeartRadio app, and you can catch all shows at andytuttle.com. Thanks for listening to Tuttle Talk, where we're making financial intelligence a priority in the community. Have a great weekend.